What's going on, everybody? So today, we're gonna be going over on how to find your daily bias. Okay. So whenever before you start trading or anything, making your analysis, any of that, the first thing that you're always gonna want to do is you're gonna find your daily bias. Now, what is daily bias? Daily bias is basically whatever direction that you're trading for the day. You're finding an analysis based off of higher time frame data and set points so that you can figure out what direction you're going to be favoring for the day. Okay? Now, obviously, when you come down to the lower time frames, based off of how the market trades, you're going to adapt and all sorts of that stuff. But overall, your daily bias should be the main thing that you focus on before even forming your lower time frame setups. Okay? So, your daily bias is always going to be on the higher time frames, basically. So let's do this. Okay? So let's try form our daily bias on NASDAQ, okay? We're on micros right now, but the only reason we're on micros right now is because it's because I have all my other markups on the other charts. So let's go over daily bias, right? So we're on NQ or NASDAQ 100, right? We are on minis or micros right now, but it is the same exact market as minis. So the regular NASDAQ market is going to look exactly like this. This is just a different contract size market, okay? So whenever you're trading or trying to form your daily bias, you're always going to want to start on the higher time frames. So if we're forming our daily bias, I always will start on the weekly time frame. So I'm going to give you guys the 5-step process. And if you guys follow these 5 steps every single day, you guys will be able to figure out what the daily bias is, okay? Okay, so let's do it like this. So, first step, you're going to want to find order flow and market structure. Okay? That's the first step. Spread that out a little bit. So, order flow and market structure. That's the first step. Second step is recent liquidity taking. So that's step number 2. Step number 3 is going to be swing highs and lows. I'm going to change that to 3. And 4 is premium or discount. And number 5 is going to be fair value gaps and order blocks. Okay? Those are the 5-step processes of finding your daily bias, okay? So make sure you guys remember this, okay? So this is your 5-step process of how to find daily bias here. So the first step is order flow and market structure. Second step is recent liquidity taken. Third step is swing highs and lows. Fourth step is premium or discount. And your 5th step is fair value gaps and order blocks, okay? So, and I'll even do this as well. Okay? So for the first step, you're going to want to stay on the daily time frame or the weekly time frame. Actually, technically both, okay? Recent liquidity taken, you're going to do the same thing. Daily time frame, okay? So daily and weekly, okay? And we'll spread this out a little bit more. Okay? Swing highs and lows, you're going to be doing this on the daily time frame. The daily time frame and the 4-hour. So daily and the 4-hour basically, okay? Daily, 4-hour, and you can also use the 1-hour please as well. Okay? So the daily, 4-hour, and 1-hour. 1-hour. Okay? Now, premium or discount, okay? This is going to be on the 4-hour and the 1-hour time frame, okay? So 4-hour and 1-hour, okay? Now, obviously, you can use these on the daily, but if you're trying to find those lower time frame setups, you're obviously going to be wanting to trade on doing it on the 4-hour or the 1-hour, to find those lower time frame setups. But for daily bias, we're going to be focusing on the 4-hour. We can do the daily as well, okay? fair value gaps and order blocks, these are going to be on the lower time frame. So suggesting the 4 hour. And we can, let's just do daily. Okay? Let's just do daily. Okay? So looking at it like this. This is your steps, okay? These are your steps. The things in parentheses are your time frames, okay? So let's focus on this. So, first step, order flow and market structure, right? So, order flow, remember the last videos that you guys watched in the mentorship, order flow is whatever the direction is the market is favoring. Is it favoring buy side or is it favoring sell side? Okay? What side of the market is it favoring? Market structure. You know, what kind of market structure do we have? Are we in an uptrend? Are we in a downtrend? Are we in consolidation? Do you guys see any higher time frame market structure shifts? Do you guys see intermediate term high or long term highs? Do you see any short term highs? Do you guys see any breaks of structure? Do you guys see any sweeps of liquidity? You know, what kind of market structure do you guys see? Okay, so let's focus on this. Order flow. Okay, so order flow. When we look at order flow on the higher time frames, if we're in an uptrend, right? Market is trending upwards. We want to see the reactions. So if this is the uptrend part, okay? If this is the part of the uptrend right here, this is our uptrend right here. We want to look at when it was trending downwards before. And we want to see the reactions of it off of the opposite candlesticks. So if the uptrend, so if the bullish candles are white, we want to see the reactions off of the white candlesticks that are in the downtrend. So you see when it comes up to here, and it taps this white candle, it rejects lower, right? But then when it comes back higher, all the way to, I would say, maybe here, right? Maybe around this candle, including the wick, maybe. we are respecting the white candle. So, and then it coming back down, you see how we come back down and then react here as well, off of this breaker here. So we want to look at the opposite candlesticks, okay? So in an uptrend with the bullish candles, right? We want to see the reactions off of the opposite candlesticks here, okay? So order flow, we're in an uptrend. That's our order flow. Market structure, we can see that market trades back down here, trending down a little bit, but having a little bit of a pullback. But what do? We actually are tapping into this breaker block here, which we will, discuss later on, okay? But on the week, we can actually mark this out here just for now, okay? But what we can do now is actually, we see we're trending down now in this bearish pullback right here. Order flow is bullish. Market structure, what kind of bullish market structure do we have? We have a market structure shift here, okay? This is our market structure shift on the higher time frames, okay? So remember what a market structure shift looks like. Low, high, lower low, higher high. And remember when we have that higher high, we're having displacement over the previous short-term high, okay? So that is our market structure shift right here, okay? This is our shift in market structure right here. And this is a bullish market structure shift, not a bearish one, okay? So step one is order flow and market structure. So step one is bullish. So let's mark this out as, here, let's use a sticker. We use a thumbs up or, let's see. We'll do thumbs up right here. And we'll make it green, okay? So this is bullish, okay? This is bullish. Step two, recent liquidity taken. And also, before we go over the rest of the steps, actually, so we're going to do all 5 steps. Whichever steps are favoring more bullish or more bearish is the bias for the day. So say we have 3 bullish steps and 2 bearish steps, we're going to be bullish for the day. Say we have 3 bearish steps and we have 2 bullish steps, we're going to be bearish for the day. So whichever one adds up more, okay? So recent liquidity taken. We're going to do this on the daily time frame and then, or on the weekly time frame, then the daily time frame. What is the most recent liquidity that had been taken? Do you guys see any? I see we swept to buy side here on the weekly. I see we had swept to buy side liquidity here. Do you guys see anything else? No, me neither. So let's drop down to the lower time frames, okay? You guys see any other liquidity that have been taken? Me neither. Okay? So, for recent liquidity that have been taken, on the weekly and the daily time frame, it is bearish. But we had pushed past this, coming up here. So when we push past that, we can see on the daily time frame that this would be technically taken on sell side. All of this sell side liquidity here. Okay? So all of this sell side here had been swept here. Okay? Also, we have equal lows here. Remember, equal lows is engineered liquidity. Okay? So we have a bearish liquidity sweep. Remember, a buy side liquidity sweep on the weekly time frame. But on the daily time frame, we have a sell side liquidity sweep, which pushed up higher, taking out this high right here, which would be known as a break of market structure or a break of structure. Okay? So when we're looking at this now, we want to see here. We want to see order flow and market structure. That's bullish. Break of market structure bullish. Market structure shift bullish. Recent liquidity taken bearish to bullish because we swept buy side to then sweep sell side. So we're bullish on this one. Okay? So let's mark this one out as bullish as well. Okay? So bullish and bullish. Okay? So two bullish bias right now. Swing highs and lows on the daily, the 4 hour and the 1 hour. Okay? So what is our swing highs and lows? So swing highs and lows are the most prominent highs and lows. Okay? So we're going to mark those out. So these are going to be our long-term highs and our long-term lows. Okay? So swing highs and lows. We have one here. That's one that I see. Then we have one here as well. Okay? So at the moment, these are our swing highs and lows. Okay? So this is our trading range from this low to this high. This is our trading range. So when we go from low to high, that means we're bullish. When we're high to low, that means we're bearish. Okay? Coming down to the 4 hour, we see that our swing highs and lows on the 4 hour time frame would be looking like this. Right here would be our swing high. Make this like green. This would be our swing low here. Green. So we're high to low now. That means we're bearish, right? Okay. And on the 1 hour, it basically pretty much be like almost the same thing, pretty much. So seeing this playing out here, okay. So playing it out here, on the daily time frame, we are bullish. On the 4 hour and the 1 hour, we are bearish. Okay? Because it's from high to low. So we come to the daily, look at our steps again. Let's check this out. So we got two bullish. Let's copy this or clone it. Okay? This would be bearish. Okay? So two green, one red. Okay? So two bullish, one bearish. Premium and discount. Okay? So on the 4 hour time frame, let's measure this out. 4 hour time frame, let's measure premium and discount out. Okay? So remember, premium and discount, it looks like this, remember? And if you guys want to do this with your Fibonacci retracement tool, what you can do is you can pick this. It would be on the left side here. Start right here. And when you draw it out, you can edit the settings right here on settings. And you would put these points in here. And then to save it, you press template at the bottom and then save as. Okay? So this would be premium and discount. So remember, anything above the 0.5, which is equilibrium, that is premium. Anything below the 0.5, that is discount. We want to sell in premium, buy in discount. So what are we right now? Where are we in right now? Current market price is in premium right now, right? So that means we want to sell in this area. And if we want to sell, what is that? That is bearish. Okay? So, coming back to the daily time frame. Also, let's measure this out on the 1 hour as well. We can do this on the 1 hour. So we are in premium as well. Okay? We want to measure this out. And say we used it by shrinking it down from this high, even this high. Both would be premium, okay? So let's come back to the daily time frame and let's see this. So premium and discount, daily 4 hour and 1 hour. We are in premium. So if we're in premium, what does that mean? We are bearish, okay? So let's put another one. Okay? So we got 2 bullish, 2 bearish. So this last one decides the fact or our fate. Okay? So fair value gaps and order blocks. Okay? And we can do this on the daily, 4 hour and 1 hour. So on the daily time frame, we see all these gaps that haven't been mitigated. Okay? So on the daily time frame, we're in premium right now. Okay? Wanting to trade lower. Not only lower to reach discount on the daily, we're also in premium to short. We're also in premium to short on the 4 hour. Same thing with the 1 hour time frame. So let's look at the 4 hour. Or let's look on the daily time frame. Is there any fair value gaps or order blocks left for us that are not tapped into that we can use for an entry? Or as a higher time frame rejection point? Yes. We have this order block here. Okay. We have a bearish order block here. Remember last up close candle before an impulse move to the downside with displacement over a low? Remember that? That's our order block here. Okay? That's our bearish order block. Do we have any fair value gaps? Yes. We have a SIBI here. Remember, sell side imbalance, buy side inefficiency. This would be our fair value gap here. Remember, fair value gaps look like this. Wick to wick. And if there's no wick, do it to the body. Okay? So that is our SIBI, sell side imbalance, buy side inefficiency. Market is tapping into it. And what do we want to see it respect? Consequent encroachment, which is midpoint of the fair value gap, okay? So right now on the 4 hour, or on the daily time frame, we have these two PD rays that we can see that it can tap into in premium for us to go lower. Is there any in discount that we can use? Yes, we can drop back down into it here to then push higher. But at the moment, we are favoring premium right now because we are in premium. And for us to go into discount, we need to reject off of something in premium. We also have this 1 hour gap here as well. Okay? So we have a 4 hour gap, and we also have a 1 hour gap here. And they're both getting tapped into right now. So what could price do? Price could reject lower here. We're in premium, and we have a bearish fair value gap right now. And a bearish order block that we could potentially tap into if we trade up even higher. Okay? So, finaling that out, 2 bullish, 2 bearish. Final one is bearish now. Okay? So order flow and market structure. We are bullish. Recent liquidity taken, bullish. Swing high and low, bearish. Premium and discount, bearish. Fair value gap and order block, bearish. So based off of those 5 steps, we are bearish. Our daily bias would be bearish. Now, let's say we disrespect this fair value gap and we disrespect this fair value gap, then that means we can start to see some bullish order flow coming into play. And we can see that those fair value gaps would turn bullish because they would turn from a SIBI to a BISI, which we know as an inverse fair value gap, and it can be used as support to push higher. So, if we disrespect those order block or those fair value gaps, this one would become bullish. So then we would have 3 bullish and 2 bearish. Premium and discount, we push past premium and we continue higher. That means we're pushing past and creating a new range, which means we would be bullish. Okay, creating a new range would be bullish. Swing highs and lows, right? Swing highs and lows, we push past this swing high. This swing high or this long-term high would be invalid, which would mean that this would be bullish. So depending on what the market does and how it reacts, we would change our bias depending on that. But at the moment, we have 3 bearish and 2 bullish. If you do this every single morning, what this will do is it'll allow you to identify what part of, or what direction you want to be trading for the day. And because of that, that'll be easier for you to identify your lower time frame setups. Okay? So this is basically how you would do your daily bias. This is the simplest, most easiest 5-step daily bias that you can do every single time before you trade. Every trading session, you want to do this before you start looking for your setup on the lower time frames, like on the 15, like the 1 hour, the 15 minute, 5 minute, and 1 minute. You want to do this before you do that. Okay? I hope you guys took down notes, and I'll see you guys next time.